Welcome to Uncommon Core, where we explore the big ideas in crypto from first principles. This show is hosted by Jon Charbonneau, co-founder and general partner of DBA, and me, Hasu, strategy lead at Flashbots and advisor to the Lido DAO. Today we are very excited to bring you an interview with a former searcher. He taught so many people about the intricacies of MEV. I think one of his most famous threads is the whole saga of sandwiching and resandwiching and salmonella attacks that were happening on Ethereum proof of work days. His nickname, among other searchers, was Bot C. Miller, which then became also his Twitter name. Now he is a product steward at Flashbots. He's actually the product steward at Flashbots. Welcome, Robert Miller.
Thanks so much for having me. I'm excited.
Cool. Yeah, welcome also to you, Jon.
How's it going? Excited for our semi-annual podcast recording.
Yeah, I think we really got to question what we're doing here with this frequency. That's not the topic for today. Today we're talking about Ethereum, we're talking about Solana, we are talking about MEV. And yeah, we're trying to connect it to all of the things that we're working on inside Flashbots. So we have BuilderNet, a new protocol that we released on Ethereum Layer 1. There's Rollup-Boost with Flash blocks. And all of these things really strongly relate together. They relate to the Ethereum roadmap debate. They really strongly relate to rollups and the way that we want to scale and innovate on Ethereum. And they also strongly relate to other ecosystems and what we can learn from them. So why don't we start here? Jon, you recently wrote, I think it's not probably wrong to say already, the post of the year. You really, I think,
put for worse.
You put your finger on some of the issues in the Ethereum ecosystem, in the Ethereum community, where I feel very reminded of something we went through with Bitcoin back in the day, where really it wasn't really clear, I think, what people want Ethereum to be. And you have very polarizing sides that if you ask 5 people, what is Ethereum, you get 5 different answers. They all want it to be basically optimizing in a very different direction. And it leads to this, it leads to this governance by, it's almost hard to describe what it is exactly, right? It's kind of, in any case, there's no unified direction to what the Ethereum ecosystem is doing. So why don't you start us off with explaining what is the issue behind what we have now come to know under the name, the Ethereum North Star debate?
Yeah, sure. I think you summarized and teed it up well there of the main kind of recognition I think a lot of people in Ethereum have had kind of progressively over the past year or so is that compared to most of these other major ecosystems, so that's Bitcoin, Solana, Celestia, go down the list of all the new competitors on all these dimensions. There's generally less clarity and cohesion in kind of the Ethereum ecosystem on just what are the primary objectives of what we're building, what's the purpose of all of this stuff. Is it focusing on, we want to build this permissionless money? Is it, building a great tech platform? And then what does that look like? Is it building the best execution environment for everyone in the world to use that's permissionless and censorship resistant? Or is it more of this kind of hub for launching a bunch of rollups and they can have all these different degrees of trade-offs on them? All of which are valid things. It's just that there's more realization of we're at a stage where at least in my mind, I think it would be quite helpful to just try to get more general agreement just within the community broadly so that we can more effectively pursue any or potentially even all of those different goals, as opposed to kind of, we tend to argue in circles on a lot of these things when feel like we're having low-level technical debates, but they're really debates at a higher level of just disagreeing on what the end game that we should be building for is. And concretely, I would say the stuff that will end up relating the most in particular to a lot of what we're going to talk about today, and where a lot of this manifests is kind of this general, I would say, debate or disagreement on what is the prioritization and end use cases of L1 versus L2. where historically, all the activity on Ethereum had been on the L1, still the large majority of it today, by value and stuff like that. And so, for example, with you guys, that's where all of the MEV infrastructure has started out. That's, it's the most mature MEV ecosystem in all of crypto by quite a wide margin. And so now over the past year or two, as people are really starting to shift at more scale into scaling up these L2s, we're getting to that point where, it makes sense for you guys. You're starting to launch L2 products now for people to deal with MEV there. And at least now early on, it does still look quite different from what we see at the L1. And so part of the question is, how is that going to evolve over time? And then from the Ethereum perspective, it's, what is the level of prioritization that we actually have between these things? Do we want to kick everyone off the L1 anyway? All the users are going to be gone. And then, perhaps that changes the types of activity that we need to think about and deal with there over time. And I would say directionally, the trend has been obviously, users and volume on average are moving towards L2s. But still by far, the biggest hub in crypto is actually still Ethereum layer 1. So it is still actually the primary place to deal with MEV, and it is generally pushing the forefront of new designs and research as well as you guys see with BuilderNet and stuff like that you're trying to push now.
One thing that I would add there is that even though Ethereum is generally the hub for new designs and MEV research, R&D, etc., that was not supposed to be the case with the with the Rollup-Centric roadmap. We were supposed to have a bunch of different innovation going on L2s that would make its way back down to L1 eventually. It would sort of serve as a testing ground for things on L2s first to go back down to L1, and for whatever reason that hasn't played out that way. And one thing that we're trying to do with Rollup-Boost is to reignite that part of the roadmap and sort of let 1,000 different rollup innovations bloom to make their way back down to L1. The concrete example of this would be like testing out Fossil on L2s before we roll this thing out on L1.
Yeah, maybe I'm biased here, but for those who have basically followed my journey, I started out in Bitcoin in 2017, and then I was very heavy in the Bitcoin research ecosystem and writing a lot of stuff. But I increasingly fell into the Ethereum rabbit hole because of DeFi. Right? I discovered what you can do on Ethereum because of DeFi around 2019, I would say. And from there on, I spent most of my time there. But as someone who was using DeFi all the time, so in DeFi summer and beyond, I was very heavily, I was trading, lending, borrowing, yield farming, trying out everything. And it was very clear that this stuff, even if you looked beyond the kind of unsustainable yields, it was very clear that there was something revolutionary going on with protocols like Uniswap and Maker, Compound, Aave, Lido, and so on. That something genuinely novel. And if you kind of compared it to how much, if you looked at every single relevant metric, who's paying the gas fees on Ethereum? Where's the TVL in Ethereum? All of those things basically. DeFi was the number one app by far, right? DeFi, and in particular, the kind of high net worth DeFi. That was really what Ethereum was about for me. But when you were talking to Ethereum developers, to Ethereum researchers more broadly, then you would almost never hear them talk about DeFi, right? You would hear them almost, talk about these separate types of applications, like DAOs and public goods funding and, privacy solutions, which had some overlap with DeFi, as we now know. There probably a ton of stuff that I'm forgetting as well. But it really seemed to me like we were living in these two parallel worlds that were not really overlapping. And, if you ask me, okay, how did we get here? I think this is where the chickens are basically coming home to roost. You had this incredible product market fit. You didn't really try, right? You put out this general purpose platform. You found insane product market fit with DeFi. but you never even knew who your users were and why they were using Ethereum, and where all of your TVL and your transaction fees and all of the daily active users were coming from. And now the apps are starting to leave, and people are like asking, okay, this is clearly not the best chain anymore for DeFi, right? And yeah, I think this is my personal take, how I think we ended up here.
Yep, I would broadly agree with that. And I think that has been more of the realization progressively over the past year, is just trying to probably reprioritize some of this stuff, realizing that, hey, this is, where a lot of the product market fit is. Because, yeah, similarly, what are the things that I concretely use Ethereum for, is very consistently, it is still generally, some variation of high value DeFi where, that is still the place where, most people trust the most, and where I'm going to leave, a large percentage of my on-chain net worth, and that I'm going to do simple high value transactions from time to time. And I do them less often than I would, as a result of, generally, not scaling and prioritizing the L1 and stuff like that. But yeah, there's a realization that, this thing is maybe even stickier than we expected it to be. I don't know if that's the case, for people from a few years ago, of realizing that, people really do want to use this thing. And so there's some level of reprioritization of, this stuff is going to stick around. It's probably a really valuable thing. We probably should prioritize this a bit more. And that it's very also just not mutually exclusive as well, with obviously having a bunch of L2s. In fact, I think it's the opposite. I think more people are starting to come around to that realization, that, scaling the L1 doesn't mean you're abandoning L2s. It's just the obvious, thing that you should do for the hub for all of the L2s. That is supposed to be a useful place.
Yeah, we can already see that there's like core DeFi, and that can be on layer 1. Then you can have more satellite DeFi, the clearly like lower value use cases, like, meme coin trading, where gas fees are abstracted, and maybe the average trade size is more like $500 to $1,000. And that's something that you can perfectly do on layer 2, right? And this stuff doesn't need the composability as much, because, people are not collateralizing their meme coins. I hope that it stays that way. But I had another thought, and I'm going a little bit off track here. So I don't know if you two saw that, Polygon and Polygon team and Jörn and Morpho and other folks were putting out this proposal for actually putting some of the Polygon bridge into lending markets, right? So obviously this is not a new idea. At least a Blast has done it before. I think it'll probably become a thing where you just tap into this additional kind of source of yield and like capital efficiency in the future. But it just the reactions that you saw to it is, you on the one hand, like you have a strategy, which is you want to become this unified bridge aggregator, right, with kind of the egg layer. Just this is kind of this, it's this bridge really for a lot of rollups that like outsources, or it bundles a lot of the accounting that is necessary, which then makes, among other things, like interoperability between these chains easier. But then you have this proposal to be the unified bridge, which it's just saying, we're the best bridge, you can trust us, we're the most safe, but we're definitely safe enough. But then on the other side, you're kind of doing this proposal to say, hey, we actually like want to rehypothecate all of your funds. And it's just a big mistake in positioning, right? Like in particular, if you pursue this kind of strategy, if like you want to aggregate all the bridges, you can't also say, oh, but like let me also be, do this thing that's theoretically good, but maybe not for you, right? And the very same thing I feel like is true in Ethereum, where DeFi is this incredibly high value use case, but you're kind of pushing people to the layer 2 because you're not making the layer 1 any better, right? And so it's just falling behind in terms of progress, in terms of UX. And you're kind of saying, but people can use can use the layer 2s, but the people don't want to use most of the layer 2s yet with their high value use cases, right? I use layer 2s, but I have way more than 90% of my net worth that is on chain. I have it on Ethereum. And I just have to, I don't even have to look at the data. I can just look at myself. Would I put those funds on a layer 2? No. These are all still controlled by governance, not to their own fault, but it's just not like it's just like too early, way too early to even think about deprecating the layer 1. And I mean, that's what we are technically doing, right? If you stop improving in a fast moving market, then effectively you are deprecating. And so, yeah, I just got reminded of this when I saw the Polygon proposal and then realized, well, this is the exact same thing that we have been doing with Ethereum layer 1.
I think it's also not 0 or 100. I think we're mostly arguing about the degree to which we focus on L1 versus L2. And it sort of felt like it's focused 100% on L2s, and that's kind of the problem. As opposed to we should focus 100% on the L1, because I think in the long term, most people would agree that you couldn't have the world's financial system just running on L1, at least under the constraints that it is trying to optimize for. You need some way of scaling. It makes sense that you do that in these different domains. It makes sense that you try to aggregate it back on the Ethereum space layer and use its sort of unique capabilities to do that. And so directionally, I think the Rollup-Centric roadmap still makes a lot of sense. You're going to need it to scale. We're just sort of arguing on how much in the short term do we prioritize scaling the L1 anyway, while directionally you still want to go towards the Rollup-Centric roadmap in order to put the world's financial system and a bunch of other forms of computation and apps on Ethereum through the Rollup-Centric roadmap in the long term too.
Yeah, I would agree with that. My general quick summary of this kind of whole general area is it kind of comes back to, I mean, when I had written using Josh's meme of, we're all building the same thing. I think that most people have certainly the realization over the past few years that most of the endgame architectures for any of these chains, whether we're talking about Ethereum, Solana, Bitcoin, Celestia, go down the list, they're all generally converging on a somewhat similar model in the long run. That doesn't mean it doesn't matter what you build today. It actually means almost the exact opposite, is that potentially the most important thing is the path dependence and, what is the timing and degree of prioritization on these different dimensions of, what is the timing and prioritization of scaling the L1 versus, making it easier and more amenable for L2s to launch on top of you? What is the timing and prioritization of caring about your base asset versus just trying to build the best tech platform? So if you actually do think that we are all building towards a relatively similar architecture in the endgame, which is where I think directionally we're going, there's some differences between them, but actually the most important thing becomes, what is the correct strategic way to prioritize and sequence these different parts of the roadmap along the way there. And that's really what a lot of the conversation, as Robert was describing, kind of is now, is a little bit of a reevaluation of the timing and sequencing of some of these things, where we said, stuff like L1 scaling, where we just kind of just ignored it for a few years, and it was more of we'll get to that in 5-10 years when we have ZK and all these fancy things. There's a little bit of a realization of, oh no, this may be strategically valuable and important to kind of bump this up the prioritization and do a little bit more of this now, because this is clearly where there's value, and we're bumping up against a lot of limits right now on what we can provide.
In this thesis that we're all building the same thing, do you guys have any thoughts whether that means that we will have a bunch of ecosystems that all look relatively the same in terms of the layers that they are playing on? Do you think, for example, that, Celestia, right now it's doing DA, you think it's also going to go into maybe consensus and other parts, right? And, maybe, Solana will, also go into all three. Do you think that, every chain will eventually, or every ecosystem will eventually do everything? Or will there be some aspects of the general blockchain stack that will be, abstracted and unbundled into its own shared layer?
I think effectively everything ends up doing everything as the boundaries between these things start to become very blurred. And so I'll explain that a bit more concretely. I mean, starting with Ethereum, I think it's pretty easy to say, if you just generally play out what Ethereum is doing right now and it prioritizes everything, it basically is doing everything. We're focusing on the moneyness. We're focusing on having an L1 execution environment. We're focusing on, having a robust consensus layer that gives a lot of data to all these L2s. It is generally doing everything. That was kind of a part of the point of the whole North Star thing. If you look though at, is someone like Celestia going to end up doing everything? I think that's where it comes down to. The lines between these things get very blurred. Concretely, the thing that Celestia does not do today, they're a consensus layer that provides a bunch of DA. The thing that they don't have is they don't have L1 execution. And so they want to add ZK accounts, which is just minimum functionality to verify ZK on the base layer. And so that allows you to launch rollups, kind of, similar to the way that you do on Ethereum, more so, actually a little bit more towards how Ethereum wants to go with native rollups, which kind of gets into the point of, the boundaries between these things blur, I think, when you play this out on a long enough time horizon of, 5-10 years, which is part of why, people like Justin, who have generally had a very long-term view, I would say, directly in their prioritization of the Ethereum roadmap, he talks a lot about, these, native rollups, that, we're going to add some sort of opcode in the future to verify ZK on the base layer. And they can really be much more kind of one with the base layer, where they are, directly the same as the layer 1 EVM. They can upgrade in unison. You can do those things. And so at this point, if you add those things, and it's being like actually natively verified within the EVM execution, and then the data is also on the Ethereum data layer, what is the difference between this native ZK rollup and the L1? Effectively, it does become, a programmable execution shard. What is the difference between these things? And so I agree with that on a long time horizon, that as Ethereum starts to enable and add those things in, 5 years, whatever it ends up being, those do end up looking quite similar to the L1 if you put that spot on the trade-off spectrum of, they're pretty just one-for-one compatible. We don't have governance on this thing. We decided to just use ETH as a gas token. Effectively looks like the same thing. And so I think that Celestia will have those. That's effectively what we're talking about here is, there's going to be these verifiable execution environments that use its data. And, what's the difference between this thing being called the rollup on Celestia and being called the L1? Ethereum is going in the same place. The important path-dependent advantage is that those things do not exist today, obviously. Ethereum has the L1 execution environment, which is definitively different today from, Base or Arbitrum or Optimism or any of these other things. It is a different state space with very different trade-off assumptions. And so I think that they're going towards a generally similar place. And even Solana, they have their own L1 execution environment, but anyone can go launch an L2, and they're going to have more of those over time. And so if people are launching those, you almost get forced into a rollup-centric roadmap to some degree on a long enough time horizon, because anyone can just go launch an L2 on Solana, and it's a big data pipe. Why not? As long as there's users and assets on the L1, and you want access to those in a trust minimized way, but we need to customize for whatever reason, it makes sense to go launch an L2. So it's the same thing of, they're all ending up in a general similar shape. Yeah. And then the big question becomes, okay, if we're all ending up in a generally similar place in the long run, what is the area where we have a big advantage today that, if we're thinking that the thing that matters path dependently is strategically, what do we prioritize on what timeline? What is Ethereum's really big advantage is that thing that we've been talking about that we all want to use Ethereum for and that we don't want to go somewhere else for. It is the fact that it is still by far the most trusted execution environment for stuff like high value DeFi. That is still the default place where you're going to keep a lot of your money and do simple DeFi and do stuff like that. And so I think there's more of a realization of that, of, a lot of this stuff does look similar in the long run, but very definitively for the next 5-10 years, I don't know what the timeline is, there is a big difference qualitatively and quantitatively in what Ethereum L1 is providing versus these other places. So we should lean into that area where that is the one very big area where Ethereum does have a definitively large advantage.
So what we already touched on it a little bit, but what's the rationale behind Ethereum betting so hard on rollups, and in particular not these kind of enshrined rollups, but you could call them the private market rollups? And what are the remaining issues with this roadmap?
I think that the Rollup-Centric roadmap, if you go back to the original post, it kind of lays out two things that were objectives. The first was to increase the scale of Ethereum. And the second thing is to increase its innovation and to get many different teams building on Ethereum, not just Ethereum core developers, but a bunch of different people trying out a bunch of different things that look a lot different than what Ethereum core developers had been doing thus far. And that is really interesting because you could have parallelized innovation on top of Ethereum that would then feed back into the L1 once someone figured out something that worked, like a new opcode as an example, or a different an upgrade to the EVM that you try out on L2 that makes its way back into L1. And I think if you look at it, we have been unequivocally successful on the first dimension, the first objective, which is to scale Ethereum. You go to L2 beat, you go to rollup.wtf, you can see we've increased transactions per second, manyfold. I think it's something like 25x the last time that I looked. We've increased gas per second, something like 65x from what it would be just at L1. You can transact on base at sub-cent transactions to do swaps, which is kind of ridiculous. If you think about the heydays of 2020, you're swapping on Uniswap, and it would cost you $1,000 at peak in order to make a single trade. And now we've had a 10,000x from where we were at those times of congestions, being able to swap on base. And so we've been unequivocally successful on that first goal of scaling Ethereum. But if you look at the second goal of sort of increasing innovation on Ethereum and enabling parallel innovation of many different teams working on Ethereum, I think there's been a lot that L2s have benefited from the L1. Basically, everything the L1 has done has ended up making its way to L2s. Go look at the OP stack. It has blobs as one very concrete example. But basically, nothing has made its way from L2s back to L1. So I think we've kind of failed at the second goal of getting a bunch of different teams working on Ethereum. There are really interesting things that are going on. So there are a couple innovations that I feel like are opinionated people are taking now. Stuff like Mega ETH, sort of pushing the trade-off spectrum to its absolutes. Stuff like Eclipse, a different VM. And then we're sort of just starting to see more purpose-built rollups that are doing stuff that the L1 could never do, like Unichain, fast block times, using a TE sequencer, or WorldCoin trying to prioritize human transactions. But there's relatively little innovation on the L2s relative, I think, to what the original aspirations were. And none of that stuff has made its way back to the L1 yet, as far as I'm aware. Maybe someone can tweet at me and tell me if I'm wrong. So we sort of failed on that second goal. I do think that one caveat to that is that there are a lot more very well-funded teams and foundations now that are funding public goods, sort of in the ETH space. So there's like tooling and ways that people can transact on Ethereum and its L2s that have been funded from this, and that is one piece of innovation that I think you can point to, but not something so fundamental as an upgrade to the Ethereum protocol itself. And that's why we made Rollup-Boost to try to make it a lot easier to innovate on these rollups, to try to foster a lot more experimentation on rollups that could make its way back to Ethereum on its L1. Get people to be doing stuff that's a lot more purpose-built to what exactly they're trying to do on their L2s.
Okay, before we talk about Rollup-Boost, I think like in a lot of ways, like for example, but you mentioned rollups are not innovating that much on the execution environment, right? Like so far, what we're seeing is mostly the same clients, the same EVM, the same everything that you have on ETH layer 1. And I think this is contributing to the fact that people are not really perceiving using a rollup as a kind of trade-off, like as a kind of, I'm giving up something, I'm giving up some security, but I'm gaining also something that's very significant for me, right? And I think you definitely gain lower latency and you gain lower transaction costs. And those two are very material. But now we are seeing like on other chains that it is actually possible to innovate more on the user experience, right? And like, I think like Hayden from Uniswap keeps using this analogy of the blockchain as the server, as this like server with special properties, and like why should there be one server, right? Like you would choose the server that basically best suits the backend infrastructure of your business. And I think it really speaks to the degree of customization that we are going to see in the next generation of apps. And so if we kind of, put this in a kind of general context of crypto, the reason why we're even noticing that, people are maybe taking their business elsewhere, they're taking their TVL elsewhere, they're trading elsewhere, is that maybe for the first time ever, Ethereum has what I would call like a real credible competitor. And I don't mean, I mean, Base is competitive with Ethereum, and like Unichain is competitive with Ethereum, and Arbitrum is competitive with Ethereum on like some level. And I think this is what, some people notice, at least like subconsciously, because like everything's competitive with everything. But I'm talking about like a real like competitive ecosystem where there's like actually like no linkage at all, right? And so, Jon, you've been following the Solana ecosystem way deeper than I think the two of us have. What do you think like is going on? Like, how do you compare Solana and Ethereum today for someone who is spending most of their time in Ethereum and may not have all of that context?
Yeah, happy to. I think they're a perfect example that also that shows the kind of path dependence of what they're prioritizing, even if you do end up in the same place. And that will kind of segue into some of the next stuff of, in particular, I mean, even if you think that we end up in this multi-chain world, there's a strong argument that just focusing on, I mean, even directly, as I was saying for Ethereum, you should still focus on the L1 today. Just, I mean, in practice, most of the stuff that we can do today, that we need to do in crypto today, kind of fits on one chain for the most part. And so that's been their entire focus early on of, we're just going to focus on scaling this one chain as much as physically possible. And then we'll just take it from there. If other chains pop up, whatever. But our concern is just building this kind of best, most scalable execution environment, price discovery, engine for all of global finance kind of thing. And in that, I would say the directional bias and difference between Solana and Ethereum has at a high level very often been, and it ties to a lot of what I was saying before, if Ethereum is generally more long-term focused and Solana has a much more short to medium-term focus of, the world is burning down, we need to ship the thing right now, otherwise like we're going to lose in the next 6 months, we'll be bankrupt in 3 months kind of thing. So
that
I think
might be like an inherited urgency from actually almost going bankrupt.
Yes.
I think more than once,
Yes. Like literally when they launched, I mean, it was like absolute bottom of COVID crash, and they're like, oh shit, are we going to like run out of money and go bankrupt like shortly? Like that has been their entire history. I mean, as Kyle would put it, I mean, like they're basically like in wartime all the time. That has always been their history, their culture, their kind of thinking. And one of the areas I would say that specifically manifests in, which is a lot of what we'll end up talking about today, is generally, I would say, their approach to MEV and decentralization on a lot of different dimensions compared to Ethereum, where Ethereum's, I mean, broad summarizing approach has been, I would say particularly epitomized with PBS and the merge, where the directional trade-off and decision was made that, we are going to heavily prioritize decentralization of validators. We want to offload this complexity, all of this, scary MEV stuff to these different actors so that we can keep validators dumb and decentralized. That came with, I would say, like reasonably severe short-term trade-offs of, we do have a relatively centralized builder market right now. There have been serious concerns around censorship for the past couple of years. Validators can't even enforce censorship resistance, most of them, if they're going to be outsourcing via MEV-Boost. We're trying to add these things, like min-bid helped a little bit over the past year. We want to add inclusion lists at some point, but definitively there's a fair argument that this was a bad thing on many dimensions in the short term, because we think that this is the necessary and important trade-off for the long-term health of the network, that this is how you keep validator decentralization, because that's how you keep the properties that we want in the long run. Solana has generally made the opposite trade-off of, we are going to prioritize, we need to ship all this stuff today, we need to win today, otherwise we're going to be dead in 5 years and none of that stuff matters anyway. And so, they have not gone down this rabbit hole of, doing everything possible to, how do we have a perfectly level playing field to keep, maximum decentralization on the validator set. And so specifically in regards to MEV, a lot of what you started to see lately has been very clear, showing that in the past, I would say, week or two. So, I mean, kind of walking through the quick history of, Solana from the start did not have a public mempool. When it had a public mempool arise, it was built by a third party. It was Jito who built it, who's, I mean, for Ethereum people, I mean, I'm sure you've heard of them at this point, but I mean, the Flashbots of Solana, effectively. They effectively added it.
Can you explain what is the, or Bert as well, like what is the experience of a chain? Like, why do you even need a public mempool? What is the experience of using a chain that doesn't have a public mempool? Because when you only come from Ethereum, you might think, well, we're clearly moving away from public mempool right now, right? Like we used to have it. It was terrible for everyone. People got sandwiched all the time. And now, like 80% of DEX trades are going through private mempools. So like, what is the what is the rationale here for Solana?
Well, so it's different in Solana in that, it wasn't that they had a bunch of, private, builder specific type of mempools in the way that you do on Ethereum today. It's just that specifically they didn't have a public mempool for everyone. It was just, you would just forward your transactions to the next leader and they forward it to the next, I think, three leaders. It's the next 4 leaders or the next 16 slots, I think, if I remember correctly. So you're just forwarding it to the next few leaders as opposed to having this pool where everyone in the world can kind of see your transaction. So from the user perspective, it actually doesn't look a lot different. It's not like you're, Solana users were, you had to decide, do I want to use the Flashbots Protect or some other plugin or whatever? Am I sending my transactions to someone else or am I using MetaMask Smart Transactions? It wasn't like that. It was just a different mechanism where you're kind of just forwarding directly to the leaders and there isn't this public mempool for everyone to see. And so Jito did add one effectively out of protocol where, you basically have this out of protocol mempool where anyone can see it. And so the result of that is, you got this type of stuff that you got on Ethereum as you started to get more usage on the chain, there started to be a lot more MEV, in particular types of MEV that people didn't like, a lot of sandwich attacks. So around March, Jito made the decision that, all right, we're going to get rid of the public mempool to try to mitigate these sandwich attacks that are going on right now in Solana, as meme coin trading was picking up in the early part of the year. And so that I would say shows my general view when they did that at the time was I didn't think it would hold up super long, but why not? Like, try it. This is culturally more in line with Solana, just go try the thing and see what happens. And the kind of trade-off there is what you are doing is you are getting rid of that easy ability to democratize MEV across all validators such that everyone has easy access to MEV. And you are creating an incentive for these private out-of-band solutions to start to pop up. And, this gets to all of the things that, Flashbots has been talking about for the past, 5 years, whatever it's been, of, if you don't democratize this MEV, what's going to happen? You're going to get these side deals pop up, validators with a lot of stake should go partner with, whoever's good at extracting all the MEV. They're going to make this deal. They're going to make more money because they're extracting MEV. They're going to get more stake because they're earning more SOL. They're going to compound their stake. And like this flywheel continues where you centralize the network on the person who is most willing to extract. And that is what you have seen happen in the last 8 months or whatever since they pulled the public mempool in Solana. Is in particular, you have this one very large operator who has been doing exactly this, who has access to a lot of stake and who has, had this out of band ability, outside of Jito 2, they are just sandwiching users a lot and they are making a lot of money doing so. And so now there is basically a debate within Solana of, okay, trying to quantify this to figure out how bad is this? Because all of this does end up coming down to how bad is this, if the centralization risk is, the bad guy gets all of the stake in the network in 2 years, that's obviously very bad. We need to address this immediately. Versus if they're earning, 0.1% more than everyone else, and it's not really a meaningful amount. Maybe this doesn't matter. Directionally, it seems like it matters. This a pretty meaningful amount of money that they're making right now, and so there's a lot more kind of discussion in Solana now of, okay, what do we do about this? And there's a mix of, short-term Band-Aid type thinking of, do we just throw back the public mempool in, which is actually directionally, more in the Ethereum line of okay, it's sort of admitting that we can't completely root out this problem right now. We need to at least democratize the MEV so that we're not centralizing the network in the meantime. And then we need to start getting these more out of protocol solutions, whether that's validator whitelisting so that we're not just forwarding it to the people who we know are sandwiching. Do you start having more solutions like you guys have built on Ethereum, like Flashbots Protect, even if they are more permissioned early on, trying to push users into these more, I'm sending it to people that I trust, so I'm not going to get sandwiched. Their Band-Aids are not great, but they help users while trying to preserve validator decentralization in the meantime.
Can you explain on what level exactly the sandwiching is happening? So is it the users are sending their transactions where? To Jito directly? or to the
No,
next
most
validator?
users are not sending to Jito directly. I mean, they're interfacing with an application, whatever RPC that they're connected to, and that is supposed to be sent to the validator.
And there's like
so
a list of who the next validators are, and like
Yeah.
let's say every app knows that list, and so you send it to the next validator.
Yeah,
But then
exactly.
the validator
So-
does not forward it to someone else.
So
in
normally
case
when
they're
you
not
submit a
including it.
transaction on any application, that RPC, they're going to send it to whoever is the current leader, and then that's going to get forwarded to the next few leaders on Solana. And so let's say that you are the sandwicher. Well, if it's getting sent directly to you, you can just sandwich them. Or you can have, if you're the sandwicher, a private deal with someone else who has a lot of stake. And so you don't have a public mempool with these transactions, but you are peeking at all the transactions that these validators are getting effectively. And so when they send it to the people who are willing to sell it to you, then that, whatever percent of stake that they have, you can see those transactions, and then you can sandwich those and send them directly to them. Is effectively what's going on. Either you need to have the stake yourself, or you needed a deal with someone who has the stake. Or, I mean, if you had an RPC provider leaking it to you, you could also do that. But concretely, that's what it is.
So
it's
sandwiching,
access to stake.
Yeah. The sandwiching is happening directly at the validator level, basically, because transactions are sent clear text to the validator. Okay. So, I mean, it sounds like you could relatively easily, talk about easily, but you could introduce a private RPC and then, but then you need to outsource all of the block building, right? Because you need some way for the validator to blindly sign the block that they're building. And how do you build that on Solana? That's a good question. But I think, either you and I or John and I should have the Jito guys on the podcast soon, I think, because that's a very, just like interesting debate how I think, the Solana community is looking to solve that problem. Yeah, because you really have the double whammy here, right? You're not protecting users from MEV, and you're not democratizing access to MEV, right? You're really in between these two problems. You're really choosing kind of the worst trade-off point right now, and I think that is not so great, maybe, right? So maybe they have some ideas already, like what path they want to take.
I think it'd be interesting also because the Jito folks have been put in a similar position as Flashbots to make really difficult decisions about what to do with their infrastructure, where there really is no clear answer. So, removing the Jito mempool didn't work. Sandwiching happens anyway, but it was extremely not clear that would play out like it is. Or like it had happened. I think it didn't work sort of because there was sufficient levels of decentralization in Solana to the point where you can't just go around and bonk everybody on the head and say, don't do that, this harms the reputation of the protocol, or we're going to yoink your stake or something like that. But that was not at all clear at the time that they made the decision. And I can appreciate from being in similar positions that this is hard to do. So it'd be fun to have them on, have a conversation. I feel like we can get into some interesting philosophical conversations about how you approach these sort of infrastructure level decisions. And doing that from an interesting kind of out of protocol, kind of in protocol perspective too. And the one thing that I want to add to the conversation is a few years ago, Phil, one of the co-founders of Flashbots, the godfather of MEV, he came up with the original idea in the Flashbots 2.0, Flashboys 2.0 paper. He wrote this phenomenal blog post called MEV What Do? And he's unfortunately not well functioning enough at running a website to be able to keep his blog up, so you can't find it. You have to find it in an archive, but I've tweeted it out before. And he lays out this argument for why we need to extract MEV for the economic security of the protocol. And it roughly goes that no matter kind of what assumptions you're making about your cryptocurrency, economics are probably central to them. Because if we were willing to rely on social assumptions or honesty assumptions only, then you might as well make a permissioned protocol where you're relying on some form of gating and reputation for who's going to be the proposers for these things. But that's not the world that we're in. Economics do matter, and we don't want to rely only on identity and trust. And as such, we need to incentivize people to behave the way that is desired and leverage economics. And in the long term, if you want any form of robust economic security, then you need every validator extracting available MEV at about the same rate. Because a validator that can extract more MEV than another validator is inherently going to be concentrating economic rewards. And as a result, be able to exert more influence over the long term than people who are not extracting MEV at the same rate. And this was kind of the original insight behind the decisions that Flashbots has made from the very beginning. And then I think what has been driving a lot of the Ethereum protocol's decisions around MEV, that you need to have every validator extracting about the same amount of MEV for economic security in the long term. And if you're leaving MEV on the table, then you are providing a way for an obvious kind of deviant to go out, be aggressive, extract more MEV, grow larger, and be able to then extract more MEV and snowball from that place. And so that's the design philosophy that came, or that led to things like proposer-builder separation. And I think it's coming to roost also in the Solana case too, where we were trying to rely on some assumptions that were not economics. It turns out that economics actually do matter in Solana as well. And now we have to deal with potentially a validator that we don't like growing more stake than anybody else, and need to figure out how we can get everyone, all proposers, making about the same money. The final thing that I want to add to this is that I feel like Ethereum has also been developing on hard mode, which is to say that we have been making the assumption that we have maximal decentralization from the very beginning and sort of designing around that.
All right.
And if you can assume that you can go around to all validators and tell them like, no, like stop that, like don't include these types of transactions or process things in that way, then things get a lot easier. And we've just assumed from the very beginning in Ethereum, you can't do that. And from that, I think you iterate enough times and you get to something like proposer-builder separation. And Solana took a different trade-off point. I think it was an interesting one, worth playing out the experiment, but they sort of found that it is sufficiently decentralized enough that you can't go around bonk everybody in the head and tell them don't do that thing. So it's been very interesting to see all this stuff play out. And I encourage everybody to go back and read this blog post from Phil from literally 4 years ago that made this argument for why you need to extract MEV for economics, that is now playing out in the real world as we see one validator extract way more MEV than everybody else, and potentially become a very large problem for the protocol.
Yeah. And I mean, and kind of echoing of what you said before, it's difficult. I mean, a lot of this, it's non-obvious at the time, even in hindsight, what is the right thing to do at any of these points. There's a lot of trade-offs. I mean, the Jito team's amazing. And no one thought that this was going to last forever. It's just a matter of how long was it going to last, and then what do we do? And then kind of, I would say, segueing into, as we kind of talk about the long-term solutions here, I would say a lot of the philosophical split between at least a lot of people in Solana and a lot of people in Ethereum is, I'd say there's generally broad agreement across both that, the way to fix a lot of these issues is by increasing competition and the number of parties that are able to have an input into block production. I would say the main split between a lot of the approaches between the two sides is at what level of the stack does that happen. In particular, there is a lot of hope on the Solana side that the long-term solution to this ends up being increasing that competition at the proposer level. So it ends up being looking like more like multiple concurrent proposers instead of multiple concurrent builders, which is in some sense what BuilderNet kind of is. And so, like part of what Tolly will argue is the long-term solution is that, it is effectively that kind of like whitelist thing that I was saying of, validators differentiate on like how they are executing your order flow. If I know that this validator is going to sandwich me, I'm not going to forward my transaction to the leader in that slot. And so, that doesn't work well, obviously, as a user, if let's say, half the leaders, are sandwiching and there's a long time in between those leaders. So the way that you make this a competitive market and actually have the economics generally in your favor is you try to maximize the liters per second. And so that's a mix of lowering slot times and having multiple concurrent proposers. Because now if there's a different liter every 100 milliseconds and there's multiple concurrent proposers, there isn't a real trade-off to me saying, oh, I'm going to send it to the good proposer, not the bad proposer that I know is going to sandwich me. And so we've made a competitive market. And so hopefully
but doesn't that depend on the ordering rule here too? Because you maximize the number of concurrent proposers, then any given proposer could sandwich you, no? Depends on how you're
not
ordering.
If you are intentionally only sending it to the leader that has a reputation of effectively not sandwiching you. Like if at the current time, there's a 100 millisecond slot and I know it's proposer A and proposer B, and I know the proposer A sandwiches and I know the proposer B doesn't, I'm just going to send it to proposer B and I'm not going to send it to proposer A. So that's the kind of
completely orthogonal to the idea of having multiple concurrent proposers, right?
It's just... No, it's not, because it's the same idea of the way that you make the market the most competitive is by effectively maximizing liters per second. And so that's a mix of lowering slot times and increasing the amount of liters at a given time. Both of those factors do the same thing.
Yeah, I think the devil ends up being in the details of how you compose together these leaders.
100%.
Because if you have one leader that has the last look on everybody else, then like, okay, great. Like you sent it to the one person that's not going to sandwich you, but the one dude who has the last look on the block is going to do it anyway. So it doesn't really matter. So I'm not really sure I'm not very compelled by the argument, at least in the absence of seeing the exact steps for how that composes into an actual block.
I mean, I would say on both sides there is a level of implementation details for the kind of end solution. So that's, I mean, I'm at least teeing up that this is the kind of, I would say philosophically a lot of people in Solana have this direction of we want to maximize competition at the proposer level, and then kind of work out the market there. Versus I would say the Ethereum side is more, particularly on your guys' side of, we want to just dumb decentralized validators. They don't need to think about anything, keep it more simple. And then we have this competitive market at the builder level.
I mean, but they do acknowledge that like the user can never be sophisticated enough to choose like specific proposers, right? So they expect the app basically to select the proposers for them. Okay, so they basically require the app to be way more sophisticated.
It's
kind of antithetical to Solana's existing positioning, right? Which is like, just it's easier and cheaper to develop on Solana than on Ethereum.
I mean, an RPC can just handle this for you.
Yeah. Okay. So you are introducing an RPC in the middle. Okay. Well, that's fine.
Yeah. I mean, there's always going to be some transaction routing service. Whether that's the applications, the RPCs, the wallets. All of them will have a level of control here of who do we want to send these transactions to for the users, and presumably they're going to send them to what is in the best interest of the users, and that's going to be a competitive market over time if people can choose who to send it to.
I agree.
And so the way that totally kind of use it is basically our job is to just make that market as competitive as possible. And then it should be pretty easy for, we let the wallets, the application layer, the UIs, the RPCs, all of them, they can, fight it out in that market then, and try to offer the best solution on top of that.
Yeah, to build off that, John, in the idea of involving multiple people in block production, I think essentially everyone agrees that you want to have as many actors as possible involved in block production. And it's kind of interesting to talk about the different philosophies. So in the Ethereum world, we're trying to have proposers be as maximally dumb pipes as possible, and to have the kind of proposer stake distributed around the world, ideally in as many places as possible. But this just to be a dumb job of signing a header, essentially, that you're outsourcing to a market. But we still want as many people as possible to be involved in block production. And so how do we achieve that if our proposers are kind of dumb pipes? There's kind of two ways. On the roadmap itself, an idea, I think it's called rainbow staking, is that we could have a new class of actors that have a really dumb job, which is just to look at the mempool and to say, hey, I've seen these transactions in the mempool. And the act of doing that in the protocol produces a list that block builders then need to include in their blocks in order for those blocks to be valid. And so you sort of remove and cordon off this role from the rest of what it means to be a proposer today. You create a new actor that's probably called like an includer or something like that in consensus. And it should be pretty lightweight. All you need is the mempool and then to be able to sign a message and propagate it around. And so that's one kind of idea. The other idea that we have for doing that is kind of what Flashbots has been building for a long time, which is how do you get as many actors as possible involved in the block building process. And we can talk about that with BuilderNet, but we are working off of the thesis that you have many different people all around the world that are interested in making money through something like MEV searching or being able to offer kind of features and services on top of transactions, being able to process them in a certain way. Maybe, account abstraction would be an example of this. And can we leverage that economic incentive? Can we leverage that economic gravity in order to co-build a block in many places around the world? And that would be nice because we have a lot of people that are constantly trying to extract MEV, and we can use them for some reasonable geographic distribution to different preferences and get many different people from many different places with many different compliance policies building a block, ultimately getting you censorship resistance. And so the kind of thesis being that you can leverage MEV searchers and other MEV service providers in order to get multiple concurrent builders and censorship resistance, which is kind of ultimately the whole purpose of doing multiple or having multiple people involved in block production. And that's a very differentiated thing or differentiated strategy relative to just, let's get as many concurrent proposers involved as possible. And that goes back to the original ideas that we had around decentralized block building, and kind of BuilderNet is the first concrete step towards that.
Changing gears here a little bit. One of the nice things about Solana is its user experience, especially its low latency, which it can afford due to like a different way that blocks are being processed by validators. So, Robert, can you tell us how we kind of are learning from this idea and bringing it to the Rollup ecosystem?
Yeah, absolutely. So one thing that's interesting about Solana is it streams its state as it is producing a block at sort of regular checkpoints. And that gives you the ability to know that your transaction has been executed earlier than when the full block is built. And there's a couple reasons why technically, at least for OP stack chains, you can't go below the current 2-second block times. And so if you wanted to have a faster user experience like Solana does or like Arbitrum does, or many of these different chains do, how do you get below that? And how do you also push the boundaries for kind of node efficiency as well? The answer ends up being in what we built with Flash blocks, that as you are building the block, every 250 milliseconds, we stream out the state from a block builder. And so as a Rollup user, you can know what the state is of a Rollup every 250 milliseconds instead of waiting for these 2-second checkpoints. So every 250 milliseconds, stream out the state, stream out the state, stream out the state 8 times in these 2-second windows, effectively taking what was a 2-second user experience and turning it into something nearly instantaneous at 250 milliseconds. And just brief note, since people usually ask, you could definitely get the 250 millisecond number down further if we wanted to. We chose 250 milliseconds because that is about what someone's reaction time is. Going faster than that has diminishing marginal returns. And we wanted to start at a place that was relatively higher because it'll be easier to decentralize in the future. And the final thing that we're taking from this and using it to our final sort of architecture innovation that we're learning and using in Flashblocks is that if you are streaming out the state regularly, then as a full node, you can be ingesting the state, executing and verifying it as it comes out to you instead of waiting for that 2-second window, doing it all at once. And so by kind of continuously executing and verifying state instead of waiting for these 2-second checkpoints, you are able to process more throughput. And so it's actually a scaling innovation in addition to a user experience innovation too. And that's the core idea behind Flashblocks.
We talked a little bit in the beginning about the like the motivations for why we have the Rollup-Centric roadmap, but also some of the current drawbacks of that rollups still suffer from. So where did the idea for Rollup-Boost come from?
So the idea for Rollup-Boost came from us at Flashbots looking at how do we make it really easy for rollups to innovate? How do we make it really easy to add the latest innovation in architecture or sort of add a new proof system or outsource to a special third party? And there was no way to easily do that within the OP stack at the time. If you talk to somebody like Conduit or one of the other Rollup as a service providers, they're maintaining like a dozen different Geth forks. It's like a monster right now of needing to support multiple different things, multiple different DA layers, et cetera, et cetera. And so the notion behind Rollup-Boost is this lightweight sidecar that a sequencer runs that makes it really easy to tap into external innovations. And that was something that we were kind of forced into figuring out how to build because we were trying to innovate on rollup architecture with Uniswap. Together, we put our heads down and we asked, what would make a rollup the best experience possible for traders? How can we optimize a rollup at a fundamental level to make it a really great experience for trading? And one of the one of the first things that you think about here is you have really fast block times. And so you go and you ask, okay, like how can we get fast block times? Well, natively in the OP stack, you can only go to 1 second at the moment. But that's not that fast. Of course, we can go faster than that. And so you're sort of forced to back out into this innovation of intermediate state streaming with flash blocks. But it's not easy to build that inside of the OP stack as a fork, and you don't want people to maintain many different things. And so you get this lightweight sidecar that enables many different extensions that people can add on top of their rollup. And there's a bunch of other things that we layered on top of flash blocks when backing up from the question of how do you make this the best experience possible for trading. So we also layered on no reverts. So if your transaction reverts is not included on chain, imagine if you had to pay a cent every single time you typed the wrong password in your email account or something. It's like a completely ridiculous user experience if you think about it in the abstract. We added on TE kind of proofs of and verifiable priority fee ordering. And that's really interesting because if you have verifiable priority ordering, then you can build your application in a way that internalizes MEV. That isn't possible if you know that the sequencer is going to sort of arbitrarily reorder your transactions or it might censor you. But if you have this guarantee that you're going to be ordered in just a simple priority fee ordering method, then you can build your applications in a way that internalizes MEV. And you only get that by layering on a trusted execution environment too. So those are two more things that you get: verifiable ordering and MEV internalization. And finally, by also using a TE, you get privacy. We actually, as the parties that are ordering transactions in a block, we don't see your transactions until they are committed inside of a block. And so there's sort of no point for Flashbots at the moment to be able to mess with your transactions or sandwich you or backrun you or something like that. You get an actual guarantee of privacy, which should lead to better user outcomes. So these are kind of the unique innovations of Unichain that make it more purpose-built for the use case of trading, and why we build Rollup-Boost. It's flash blocks with intermediate state streaming, no reverts, MEV internalization through priority fee ordering, and then verifiable ordering and privacy on top of that.
Yeah, I mean, for me, I think what all of this is saying, that it actually, or like what made me realize, I think, the power of something like Rollup-Boost is just like how much of both the experience, like the user experience, the developer experience, but also the security of these chains that we're using is actually determined by the sequencer process, right? And like the block building process. And you could like, what is already important on Ethereum layer 1 is just like the whole mempool and, routing of the transaction and the block building. On layer 2, it's actually kind of that time, like that time squared. Why? Because the sequencer is effectively like a lot of things in one, right? It is like it's a block builder, but it's also the validator that basically gives you some kind of economic commitment against the block that they're building, and then that they have to post to the layer 1, right? And like you're trusting, like the sequencer on layer 2 is actually controlling much more of the overall blockchain experience than even the MEV supply chain on layer 1 is. And so you have this really big, like you could say, well, this is a really big problem, but you could also say, well, this is a really big lever to then go and do like some like really good stuff to differentiate and like improve the experience for your users. And yeah, I think that's why I got really excited about this.
Yeah, I'm really excited about that too. I think it's interesting. A lot of the reaction on Twitter was like, oh yeah, this is an app chain. It's Uniswap is an app as a rollup instead. And I think that slightly misses the point almost, that it's not an app chain because it's not just a single application. It's not like there's an enshrined DEX or something like that. But it is a rollup that is purpose built for a specific purpose, and that is making trading as great of a user experience as possible. And then it's kind of sequencing rules and how it works is backed out from that. And I'm super excited to unlock the next wave of features and products once people get in this frame of mind. Because there's a bunch of different stuff that you can do with this sequencer that I feel like people aren't doing today. One super simple job that I'm excited about releasing at some point would be allowing people to just schedule sort of sequencer cron jobs in the future. And maybe that's too technical. You could tell the sequencer, hey, here is 1 ETH. Call this contract every block for the next 10,000 blocks, and then have your game iterate every single block instead of relying on outside actors. So there's all sorts of stuff that you can do with transaction ordering in the sequencer once you start thinking, how do I build this for my specific purpose? I think WorldCoin is another interesting example of this, where they have this form of identity that they're trying to prove that people are humans. And so they're going to prioritize people who they think are humans in the block over people that they don't think are humans.
Block building for humans.
Yes, exactly. Not for bots. It'll be very interesting to see play out. I'm excited for it. Yeah.
Yeah. I mean, you were earlier saying like a flash block has 250 milliseconds, and there is a rationale for why it's 250 milliseconds, and it's the user doesn't really notice the difference if it's 250 milliseconds or if it's any lower than that. So I mean, one of the things that like Rollup-Boost is also doing for these layer 2s is it is a form of PBS, right? So I just said a sequencer is really a block builder and a proposer. So you're kind of trusting both. So what we're doing here is we're unbundling that role, right? And we're kind of establishing a similar relationship here that we actually have on the layer 1. And one of the things that Ethereum is doing that Solana is not doing, and like other chains are not doing, or like that's actually not fair to say. So Solana is doing it, but it's just doing it in a different way, is the idea of the MEV auction. So what we're actually also doing in these 250 milliseconds is we're bringing MEV auctions to layer 2. So there have generally been 2 auction models on or 2 sequencing models on layer 2 that were like prevalent. One is just the first come first serve sequencing, so transactions are ordered in the order they arrive at, or they are ordered by there is a notion of kind of discrete time. There is a notion of blocks, but transactions are ordered in by the priority fee that they pay. And I think the priority fee ordering in general, you could call that almost like a mini MEV auction, right? Because it has some properties of an MEV auction in the sense that the searchers have some ability to express, how they want their transaction to be executed. What they don't have is for example, to say, I want my transaction to be in this specific part of the block, or I want like these two transactions to only execute together. I want them, to fail, if they don't execute, and so on, right? So there are basically, I think, things that were missing that like make like a priority fee auction into a full-on MEV auction that over time I think can also make their way to the layer 2, and it has just a lot of benefits, right? It has a lot of benefits for searchers. It has benefits in terms of more revenue for the chain itself, and it has also significant benefits like for users, like both because their own transactions no longer revert, but also because the overall capacity of the chain goes up. And so I want to quickly kind of hear you comment on the idea of like reverts, and just like how the idea of block building and MEV auctions in general, like it has been, I think, very mislabeled as, okay, this is just, to take money from users and like democratize it to validate us. And so it's like, you could say it's like, it's a necessary evil for decentralization. But I think very few people have actually seen it as, well, this is also a scaling technology.
Yes, for sure. So you need to pick one of three. You can choose an MEV auction in some way. You can choose that your MEV is extracted through latency instead, whoever is fastest, whoever is co-located, whoever's figured out your messed up networking, or whoever spammed the hardest on the chain. Those are your three options. And you have some people doing the first come first serve thing, and so they're choosing latency, and then most everybody else is just sort of sleepwalking towards spam without thinking it. And the reason is that if you don't have an off-chain auction, an MEV auction, then your auction happens on-chain instead, where since there's a private mempool and searchers don't have any signal on what is happening when, and the chain is extremely cheap to use as computational resources, the dominant MEV strategy is to implement your bot as a smart contract and then just hammer the chain. Just absolutely hammer it as hard as you can. Do your searching on chain, and probabilistically, you will land some MEV extraction. When someone creates an arbitrage or when someone creates whatever opportunity it is that you're trying to do. So the way that this works in practice is, user trades on base, they create an arbitrage opportunity, and then a dozen MEV bots send literally hundreds of transactions that are each just churning, trying to find arbs on chain, and one of them succeeds. The rest of them are using gas, just using space that is not economically productive, and means that other users can't use that gas instead. It effectively lowers the overall gas limit with these actions that they're just a waste. And it is even worse if you think about the fact that every full node in perpetuity is going to have to replay all of these searchers that are just churning the chain over and over, tens of thousands of times, millions, billions of gas probably. And we've been saying this for some time because our experience on ETH-L1 led us to have this insight where before Flashbots was live in the MEV Geth days, you had searchers that were wasting a ton of gas on chain trying to extract MEV. And that was cleaned up once we had an MEV auction. And this is even worse in the context of an L2 because if gas is extremely cheap, then you're willing to use a boatload of it. And you can see this happening in practice with Base, where recently up to 30% of their 20 to 30% of their blocks is used up by one or two bots that are just searching for MEV. So Base is increasing the gas limit by millions every single week, and then bots are just eating that gas creasing up. And so at some point, there's a trade-off where you actually get more juice in scaling from implementing an MEV auction and cleaning up these all this wasted gas than you do by increasing the gas limit more. And we might get to a place eventually where we do have 1 billion gas per second, but 999 million of that is used by MEV searchers looking for arbs on chain because it is so cheap and they can make it all back with a single successful arbitrage. And the final thing that I want to connect this back to what we were saying before is that on L2s, you can implement MEV auctions in a way that is still user aligned. So you don't need to have sandwiching in order to have an auction to clean up all of this gas spam. You can still have an auction, do it in a 250 millisecond window like we are doing, clean up all of the spam on chain, but without your users getting wrecked. And in part, this is because the kind of form of proposer-builder separation that you can implement on an L2 does rely on some assumptions that are just not pure economics. So on L1, we only want to rely on pure economic assumptions. That's because we're sort of optimizing for this extremely decentralized situation, maximally decentralized situation. On an L2, we can take more opinionated trade-off decisions and have just governance choose who the builder is, as an example. And that's kind of a social assumption, not an economic assumption. But because you can do that, you can assume and make these protocols where there is no front running, as an example. And we're going one step further and using kind of verifiable computation and privacy through TEEs to layer that on top of that social assumption as well, that there won't be any front running, that you can only back run in these auctions. And then you get the other guarantees that you want, like censorship resistance through the L1 too. So I think it's an interesting kind of way to connect it back to the early discussion around protocol decisions, PBS, economic security, social security, et cetera.
I think it's the admission that like some of these things is just like, it's better to do them off chain instead of on chain. But if you don't give people the kind of release valve to do it off chain in a way that works for them, then they are going to do it on chain, and it's going to be pain, for your network and for like the kind of long-term like costs incurred on like state growth and like all of those things. And yeah, so I think that's the angle that we've been taking on a lot of these things, is just like people have incentives and their incentives are going to dictate their behavior. So like you better build a solution that like aligns like what they are doing, like aligns their incentives and what they are doing with like what's tolerable for like all other stakeholders, right?
Yeah, the story behind the bundle, if it's interesting to people, originally is that in 2020 on Ethereum, you had a public mempool, and we had a lot of DeFi activity. It was kind of going exponential at the time, and it was all happening in the public mempool. And so you would get these priority gas auctions where I saw a user making a transaction that would create an ARB, and then I need to play this complicated networking game of trying to be the first person after that transaction in the public mempool. In the block that the miner eventually extracted. But then it's proof of work, and so you don't know who the miner is. They're all around the world. It's like this weird, complicated game now of having the best peer-to-peer overview, and you had this kind of iterative game being played back and forth with other bots too, where since it's all in the public mempool, if I try to ARB this thing, someone else sees that and they can front run me, take my ARB, and just pay a little bit more, and then I'm trying to bid over them. And so you would get these games where people would be tit for tat trying to outbid each other, and that would waste a ton of gas on chain as the waste of that war between multiple bots essentially is eventually included. And it's very inefficient because your sort of ability to spot transactions that create MEV and then to capture MEV didn't translate into your ability to extract MEV too. You actually needed to be super low latency, have a great view of the peer-to-peer layer. And so there were extremely high barriers to entry. And what the bundle did is it let you be very precise about the ordering that you wanted. So I care about being behind this transaction in particular, and here's my ARB. And it turned what was an all-pay first price public auction into a sealed bid first price auction too, where you're sort of competing on your payment to the miner instead of competing on your ability to one up the next person in the fastest way possible and have the best view of the peer-to-peer layer. And the barriers to entry there are way lower, so many more people could bid, and it's a more efficient auction since you're incentivized to bid your true value with a sealed bid auction. And as a result, it was way more profitable for miners to run this software than just building in the public mempool. And the way that the software was originally built too is miners would multiplex. They would just choose, is it more profitable for me to build a mempool only block or a block with a bundle at the very top of our block? And so they sort of always made the most money from running the original software. And that's where the original idea came from, was kind of lowering the barriers to entry and increasing competition by increasing your precision, by changing the game from peer-to-peer and kind of latency basis, and then cleaning up spam on chain as well from the tit for tat that these bots were playing all the way back in 2020. I think that was a Phil idea also originally. Hats off to him.
That should wrap up the discussion about layer 2 and moving to our latest announcement, which is actually BuilderNet on layer 1. And there is a fun fact behind this name, which is it was actually your idea, Jon.
Yeah, I'll be waiting for my royalties. Appreciate it.
Jon was roasting me before the proposal for our other names and how bad he thought that they were. Yeah. And initially, BuilderNet didn't really resonate with me, but it did come out on top. Yeah.
So in the future, when you transact on Ethereum, you're going to pay, like a 0.01% like eternal royalty to Jon for the naming rights that we had to rent from him.
BuilderNet your options were that, or sending it to the community builder or something else. So.
Well, Jon suggested JonNet also, but that was beat out by BuilderNet.
Yeah. So, what is BuilderNet?
So BuilderNet is our latest announcement on the layer 1. It is a decentralized, or more decentralized block builder network for Ethereum, and it kind of has two things that are really interesting that I want to call out. The first is that multiple people operate this. It's no longer just Flashbots running a block builder. We've actually deprecated our centralized block builder. We no longer run a centralized block builder anymore. And instead, we have this block builder that is jointly operated by the Flashbots team, the Nethermind team, and the Beaver Build team, the largest block builder by market share on Ethereum. And this is really interesting. You can get this because everyone is running their block builders inside of a trusted execution environment where you get some guarantee of privacy, and you can share private order flow, really sensitive information amongst the operators, and you get some guarantee on the code that they're running. So the first thing is that we have actually taken a meaningful step towards decentralization by introducing multiple different operators of this infrastructure instead of just relying on a single team like Flashbots or the Beaver Build team to operate this stuff instead. The second thing that I think is really interesting about this is that the BuilderNet network is actually refunding the value that it is able to capture. So BuilderNet is bidding within the MEV-Boost auction, and whenever it wins, it takes that surplus that between the value of the block that it could create and the value that it bid to the proposer, and it refunds that back to users up to kind of some semblance of the second price that they should be paying. So if you've overpaid for your transaction, you could have paid less to get included inside of our block. We will refund that surplus back to you. And I think that's really interesting for a few reasons. The first reason is that it is essentially upgrading Ethereum's gas market to be something like second price. There's sort of caveats on that, but roughly second price. And that's a really unique differentiator that no other protocol has, not Solana, not any of the rollups of a second price gas market. Second reason is that this is a open permissionless rule. You can go and you can look at it on our docs, on the BuilderNet docs. And it's kind of obviating the need for these off-chain opaque agreements in order to get the value of your transaction, these exclusive order flow off-chain agreements instead. And so it's an open, transparent kind of answer to off-pake exclusive order flow deals that are going on, and hopefully something that is more community aligned as well, since this builder is going to be paying out refunds from the value that it actually captures. Final thing that I want to mention as a part of BuilderNet is that it provides us this basis to be able to launch other interesting products in the future. And so in particular, I'm thinking about the relationship between flash blocks that we talked about earlier, where we have these T block builders that are ordering transactions on L2s, and BuilderNet. So in the future, we want to let rollups outsource their sequencing to BuilderNet, with a drop-in extension. And out of the box, then, you get decentralized sequencing by leveraging these block builders on L1 that are already building blocks inside of a TEE. And so it's kind of drop-in decentralized sequencing on the roadmap too, which I'm really excited about. And that's a short summary of BuilderNet. Anything you want to dig into there?
Sure. Yeah, I have actually some thoughts on like refunds, because it sounds. I think when you kind of hear it for the first time, it's not immediately clear like what problems with the market structure it actually solves, right? And so there's two motivating problems for why BuilderNet is giving refunds. And so the first one is MEV is still not priced into transaction fees, right? So I think we had, an idea like a long time ago, a couple years ago, actually, which is like, why can't we just, solve the MEV problem through better fee estimation? And it's like a surprisingly kind of salient, like it's just an overall like really, really good idea, right? Because if your transaction can be manipulated in a certain way that lets like a block builder or a validator extract any money from it, that in theory, that is a transaction fee that you pay, right? It might be an invisible fee, but you're paying it nonetheless, right? And so, that's how, for example, like Robinhood or like other kind of, retail brokerages, for example, can afford to have users trade without commission. Why? Because their trades have MEV, right? And that's how they can like sell their order flow to market makers, get paid for it, and then like finance basically their operation from that on the back end. And so it's like a long story short, but if you're paying like a $50 transaction fee, or like let's say like a $5 transaction fee, because that's more what we hope, I think, to have in the future on Ethereum. And like your trade is paying like a $50 fee because it's getting sandwiched. You're technically paying like a $55 fee, right? And the same is actually true if you're making an inefficient trade. And like in theory, you're paying a $5 fee, but your trade can be backrun for $20. Now technically you're enabling that backrun to happen because you're the one moving the pool, right? And so in theory, also your transaction should be worth something, between like $5 and $25, because you are actually creating the MEV here that then somebody else again can harvest. And so it would be really nice if we kind of would have this like overall view of what a transaction is actually contributing to a block. And that is what BuilderNet is doing, because everything is happening inside the builder, and basically the builder can compute how much each transaction is contributing to the block. It thus knows the price that it's actually paying to the validator, and can thereby kind of effectively, tell you how much you should have been, like how much you paid, how much you should have been paying, and thus how much you should be refunded. So that's the first problem. The second problem is what you touched on with like these exclusive order flow deals and so on. And it's, let me restart. So the second problem is what I would call the dual auction problem. So while the first problem is responsible for a lot of these private order flow deals where, for example, Telegram bots are making deals with builders and getting a kickback on the extra priority fees that the users are paying, or like the backrunnability of these trades. The other one is really one that's more kind of native to the MEV supply chain, and that is involving basically searchers and block builders. And so right now, when you look at the MEV supply chain, you actually have two auctions going on at the same time. And so searchers are technically bidding for inclusion with the block builders in a sealed bid auction. And then in the second stage, these builders are bidding for the to be the highest bidder with the validator at the relay. And while the first auction is a sealed bid auction, the second auction is what we would call an open outcry auction, or like is a public auction, because as a builder you can actually query what is the most what is the currently highest bid at a specific relay, right? And so this basically gives the builder a much better ability to monetize blocks like among other things, it allows them to basically like more specifically bid on the value of that transaction, right? So it goes back kind of the nature of these two auction formats, where a second price auction really encourages someone to bid their true value in the auction, and a first price auction encourages you to bid only as much as you need to be ahead of like the next person bidding, right? You just want to be like a little bit ahead. And so that is why searchers have increasingly integrated either into becoming block builders themselves, or basically making the same kind of deals with block builders that we are seeing, the Telegram bots make. So it's just a deal that like I want to technically bid also in the open auction and not in the sealed bid auction. And so I want you to bid on my behalf and then pay me back my fees, right? And so what we're seeing here is something that's been actually in a lot of ways the driving force behind kind of the last like 12 to 18 months of the market structure. And yeah, the idea I would say with BuilderNet is doing this, but making it much more democratic and much more transparent and much more credible on the way that these rules are actually enforced inside the block builder.
Yeah, I see it as an upgrade to PBS in many ways, the proposer-builder separation through MEV-Boost fixing a bunch of its problems. So the first problem being this vertical integration pressure that you have. If you are a searcher, you can kind of more fine-tune your bidding by being a builder. And so you have this incentive to vertically integrate into being a builder instead of just competing at the searcher level, which is not desirable for a bunch of different reasons. And now you can just outsource your bidding to BuilderNet, and BuilderNet will bid on your behalf. It will refund you up to the fair value of your transaction, sort of the second price in quotes. That's one thing. The second thing is that it's trying to revamp the kind of dimensions of competition within PBS to be more productive for the protocol and for users. So the main dimension of competition right now is on order flow. You're trying to go out, get these wallets, get these Telegram bots, get these users to use your private mempool, your builder instead, to have an edge in the auction. Instead, what BuilderNet is trying to do is to create this kind of open sandbox where anyone can access order flow, where anyone can compete on the best way to merge it together, or providing kind of new services and products on top of order flow too. That's kind of the ultimate vision. And initially, BuilderNet is sort of dumb monolithic builder that is run by multiple different people. It's just the same merging algorithm. Multiple people are running it in multiple different places, which is nice for some reasons. But we want to go beyond this, like I said, to create this sandbox where people are competing on providing more value to users by providing new products and services. And anyone would be able to do this too in the future. So the dimension of competition would be a lot more productive than today's competition.
Yeah, so one kind of follow-on question I had, like leading from that, which also ties back a bit to what we were talking about before, is I would say, so I mean, directly kind of on BuilderNet, as this thing progresses over time, the vision is very much, builders can share order flow with each other early on, encrypt between each other, progressing into later, even, sharing partial blocks with each other. You kind of have this kind of snowball block building kind of on top of each other effect. And so bringing this back to the conversation before of kind of like MCP versus MCB, what is the value of this kind of, really moving towards more multiple concurrent builders, like having a lot of builders actually input into the same process? Particularly if Ethereum does move to, which seems sort of likely at this point, to implementing something like Fossil, which for the listener, I mean, is effectively a weaker version of multiple concurrent proposers where, you have a lot of validators who are sending an inclusion list. And then you have one proposer who still has a proposer monopoly potentially, kind of acting as a view canonical equalizer, putting those together. But, all of the inclusion lists that everyone else has submitted are respected. And then you could just have whatever builder, outsource that they could reorder the block how they want. So concretely in that world where, hopefully we have a bunch of validators who are contributing to censorship resistance, ensuring that you are going to get your transactions included. What is the additional value there of having, a lot of block builders inputting into this process still at the end, as opposed to just having, why can't we just have one mega centralized block builder at that point? Just, perfectly efficiently optimize this whole thing. Especially, it's going to be obviously more difficult to compete with that on latency and stuff like that. So yeah, I'm just curious, like, what is the additional value add of that kind of having multiple parties joining in the building if we also do that at the proposer level to some level?
I'll start, and I'm sure Hasu, you're gonna have things to say about this
Plenty.
too. I think the concrete value is that we think it's going to be the best foundation for applications like DeFi that need a neutral platform to coordinate financial activities around the world. And there's kind of two parts of that. The first is that I think it will be more censorship resistant than you can get that with just Fossil. I think it is unclear what the impact of Fossil is going to be. I don't want to come off sounding like I'm a bear or something like that, because I'm not, and I think we should still go ahead and do Fossil anyway. But in the very first versions of Fossil, as a proposer, you're sort of sticking your hand out and you're saying, please, sir, include these transactions, and that may not be what you want to do as a proposer, especially if those transactions don't look that great to the jurisdiction that you currently reside in. And so without some level of privacy on top of Fossil, it's not actually clear to me that how many proposers are going to be submitting inclusion lists and whether these parties want to be doing this as well and how effective it is. I think it'll work regardless. Like, there will be, Ethereum is geographically distributed enough that you're going to have some people around the world that are going to, you have enough people in enough geographies with enough coverage of different compliance policies that it will improve censorship resistance as well. But I just don't know to what extent in the limit. And I think that decentralizing block building is still interesting because you can use this financial energy around capturing MEV to get more people in more places involved in the process of building a block in a way that is going to be less, less sticking your neck out, so to speak, than I am a proposer. Please include this transaction that my geography does not want me to include, or my jurisdiction doesn't want me to include. That's the first thing. I think it still improves on censorship resistance. Second thing is that I think you still don't want one monolithic mega builder because it provides a choke point for rent extraction from users. So having a single monolithic mega builder, they will get all of the order flow. They're going to be able to capture a significant portion of that value instead of providing it back to users or providing the fair amount back to proposers. Final thing that I want to add to this is that I think by involving more parties in the process of building a block, you get more points of coordination and more points of competition that are ultimately going to create more value for users in the protocol than you could ever get by having one mega block builder. One mega block builder is never going to be able to come up with the best ordering in and of itself. There's always going to be some edge case that is going to produce a better block, pack more transactions, extract more value, be able to refund more value to users, give better trades. And one mega block builder is not going to be able to serve all of the different features and products that people will want in the future. You really want a platform for open competition and coordination among as many people as possible with as low of barriers to entry as possible so that you get this maximal coordination and competition that produces the most value for users and for proposers and provides this foundation for innovation. So the TLDR, I think, is that decentralized block building is the best platform possible for financial activities by preventing choke points for censorship and rent extraction and increasing, places for innovation and competition.
Yeah, so that's a very good answer. I have some thoughts, I would say, on top of that. And so I think in general, I don't know, John, if you were at LidoCon actually in Bangkok?
The one around DevCon, yeah, I was there briefly. I was there for my panel. And that was about
Yeah, so like Vasily, one of the co-founders of Lido, he was giving basically this talk that was both a review of the last year of Lido, but also like an outlook into the future. And he was reflecting how long he had been working in staking. He had been working. He was previously the CTO of P2P, and they had been working in staking even like years before, even Ethereum then completed the merge, right? And then there were the first staking pool in Ethereum and so on. And back then, Lido was designed or like ideated as this end game of staking, right? This idea that like if you only have Lido, then there's no more innovation needed. And this is like the one size fits all solution, right? And now, like he when he was on stage, he said, like, I no longer believe in any end games at all. Like the market is always evolving, user preferences are always changing. We need to position so that we can be flexible and that we can like serve like many different use cases on the same shared foundation. And I thought this was so fitting because it's the very same thing that I feel about the MEV supply chain. It's very hard to design this like one monolithic mega builder that like works the best for everyone. And the reason is you're already seeing the block builder being kind of unbundled and disintermediated in a bunch of different ways, actually. And so if you look at, what all of the following things have in common, like a layer 2, Cowsop, Uniswap with hooks, like any kind of app-specific sequencing. Like at the end of the day, these are all basically like the user has a transaction. I include also MEV share and like MEV blocker in that list as well. The idea is just the user basically, has an intent or a transaction, and then it's processed off chain into something bigger than it originally was, right? And in the case of a rollup, like a lot of users actually have, transactions, and their transactions get like processed, like they get sequenced and processed and bundled, and then they get posted to the layer 1 as this data blob, right? In the case of Cowsop, just the same. You have like, in some cases, like many different traders who want to trade actually in the same block, and they all get put together into one transaction, right? It's all like the transaction is constructed by this network of solvers off chain, and then they're competing in the auction. It gets put into this one transaction and gets put on chain. Like MEV share, you have a transaction, it gets background, it gets put into this bigger bundle. Sorella, the idea of like every Uniswap pool can have its own sequencing, right? And like it can auction off the top to arbitrage the block to return LVR to LPs. Really, like what's happening here is that block building itself is becoming unbundled, right? Like already today, when I'm trading in Cowsop, like I have a trade intent. There are multiple solvers competing for what I want to do, and then there's an auction. It gets packaged into this bigger transaction, but then like oftentimes these transactions then either get sent to MEV blocker or Flashbots protect. Because by the time that basically the solver auction has cleared, and then it gets sent to the RPC, and it gets for very often, again, time has passed, and maybe a new arbitrage opportunity has opened up, or maybe it's even arbitrage opportunity that was only possible if you like specifically order like two transactions in a row, right? And then all of a sudden there's another background possible, on this overall like Cowsop bundle, and then it's forwarded to the block builder. And by the time it's at the block builder, maybe the pool balances have changed again, right? And there's like a third background possible on the same original like trade intent, right? And so my point is, like first of all, like already we are seeing tons of innovation like on the front end of like how user transactions are processed, and it's impossible for one builder to satisfy all of that. And there's this very strong kind of drive towards like more and more efficiency in the supply chain. And I think the only way you actually do that is if you have many small parts that can all interoperate and that can all compose with each other on the same shared foundation. And I think this is really the beauty of what like we can do with these TEEs, is that you can have a shared mempool and you can have order flow sharing between different parties. But it can all be done on the same order flow, right? Like there can be a big pool of order flow and everybody can kind of process it and can contribute to it. and everybody is also like refunded for their contribution to the block, right? That's how it connects again to this idea of the refund. Because if you can make a bundle more valuable, then you should be compensated for it, right? And that's, I think, how we can really leverage the idea of, searchers and off-chain compute and, and those things really, I think, to a degree that, eventually the execution of crypto transactions can be way, way, way better than it could ever be in TradFi, because they only had these really like monolithic kind of execution and matching engines.
And I think in part that's why we were fighting so hard here at Flashbots for these open competitive platforms, because I think the thesis is that we will, in the long term, be able to outcompete TradFi by offering better user experiences and better prices, by having more open markets with lower barriers to entry. But that's not going to be the case if you end up getting a single mega monolithic builder, of course. And to link this back also to our original vision with Suave, I think we saw into the future to some extent that all these apps were going to want their own kind of custom ways of ordering things, that you would have, collaboration and competition amongst different parties to extract value, like the solver case being background as an example. And trying to create, the idea was to try to create the ideal platform for these parties to be able to cooperate together and compete together against other parties as well. And that was where the notion of Suave Geth came from, which was some R&D that we did of, can you express what you want and how you want to be executed in a smart contract in Solidity. It turned out that was not the exact product that people wanted to use. And what I'm really excited about with BuilderNet is I think we found a better fit with stuff like the bottom of the block searching inside of a TDX that we did with rsync, where you can have a searcher deploy their entire Rust bot or Python bot or whatever you're using in a node inside of this TEE, and then have other parties that don't trust them stream in state, so the searcher can do useful stuff for you. Initially, rsync, one of the top block builders, is using this to have their blocks backrun by arbitrageurs instead of just trusting, one or two different parties to do this instead. So it is opening up the bottom of the block arbitrage market, and I think it's an early example of how you can enable coordination amongst untrusted parties with TEEs, and how we might one day get to a more distributed builder as well.
One other question I just wanted to ask kind of broadly, kind of wrapping up a lot of the conversation on this, is just curious if you can kind of walk through how you see the progression of BuilderNet over time. I would say both on kind of just on like, I would say like a technical level and a literal, what do we expect on like usage and kind of stuff of, like you mentioned, like early on, there are like more trading wheels on it. It'll be decentralized more over time. Like I know in the post, it was like BuilderNet relies on centralized infrastructure for functions like transaction ingress and data storage, like how stuff like that gets alleviated over time. And then also just kind of the status and kind of timing of just general usage of it, and any predictions, if you want, for how many blocks are BuilderNet making by end of next year.
Oh man, yeah. Let me think on that if I want to give you a prediction, only to be quote tweeted on it in the year. So I'll first start on sort of practically how this thing works and its training wheels. Practically, you can imagine BuilderNet as or a good place to see how BuilderNet works is just by imagining a centralized builder to begin with. Put it inside of a TEE. And so it's a centralized builder. You put it inside of a TEE, and so you get this guarantee on the builder that is running inside of it. You know the exact code that is processing your transactions. Like, okay, you got that, great. Now with that, what can you do? Well, since you have this guarantee on what code people are running and the privacy that a TEE gives you, you can have other parties that you don't necessarily trust running the TEE as well. And so that's the point that BuilderNet is at, where we have multiple different people running this TE builder, and they're all sharing order flow amongst each other, and they're coordinating on the block bidding process. So they're not competing with each other in the MEV Boost auction. But it is kind of the single builder code base running inside of a TE that is just sharing order flow amongst these different builders, and is distributed around the world. And that's very nice, even as a starting point, because different parties work in different jurisdictions. They have different compliance policies, and so Flashbots as an operator, has one compliance policy. We censor certain transactions, but other operators of BuilderNet have different compliance policies. And they don't censor the same things that we do. And so even as a starting point, BuilderNet is more censorship resistant than any individual builder could be today, and sort of improves on the censorship resistance of the MEV Boost market, even given that it's kind of this single centralized builder code base with 3 parties that are operating it. And the other really unique thing about BuilderNet is the refunds that it is processing. And we're trying to give people kind of something akin to the second price. There's caveats there, but something akin to the second price on their transactions by refunding them up to the fair value of what they could have paid. The minimum that they could have paid to still get included. But the way that you calculate that is by running an ungodly amount of simulations, essentially. Waving my hands a little bit here, but you run a ton of simulations to see what transactions conflicted and how do these things affect each other, and where does value really come from inside of a block, by trying many different orderings and seeing how these things relate to each other. So you need a kind of archive of all order flow that you considered in a block and precise timings for what you considered and when. And then you need to run just a ridiculous amount of simulations on these things. And so one point of training wheels initially for BuilderNet is this idea that there's an archive of order flow historically that Flashbots initially is running. And we use that, really just to process refunds by running all these simulations on a regular basis and then paying out refunds. We'll upgrade that in the future to be kind of pull instead of push. So right now, if you go to Etherscan, I think it's buildernet-refunds.eth. We're paying hundreds of thousands of dollars out to users through this ENS address. In the future, you'll just be able to pull whenever you want from the builder the refunds that you have, and they can accrue over time. So that's one training wheel. The other big training wheel is this notion of a builder hub. And the sort of long story short here is that you need some notion of identity. What is an actual BuilderNet node, and where should we be sending order flow to? And have we verified that these things are actually running TEEs in order to share order flow amongst each other? And that kind of identity management today is fairly centrally managed, again, by Flashbots as the kind of stewards and creators of this project. And it's very feasible to do decentralized identity. We just haven't gotten there on the roadmap. And so over time, we'll reduce the role that we have in kind of the setup and identity management of the process to be completely decentralized, as well as doing things like governance too. In a more decentralized fashion. But initially, that's one of the other big training wheels that exists. Final thing is that, a lot of times in block building, you need pretty fine-grained access to logs and data analytics on what was happening when you're building a block and when. So there's more debug and logging access than I would be fully comfortable with at the end game, because this is still a system that we are iterating. We want to improve the block building, make new algorithms, make it more competitive, et cetera, et cetera, et cetera. So that there is a kind of debug and logging function that we have access to after blocks are being built, not kind of in flight.
I think it's cool seeing how Ethereum is progressing here on a lot of the MEV stuff. And it's not entirely, but I mean, like to some degree comes back to the we're all building the same thing to me. Certainly not exactly, but I mean, it's interesting that you see in both Solana and Ethereum. I mean, I would say the general trend on at least, block production, how do we solve a lot of this MEV stuff over time is, basically how do we increase competition and get a lot of parties involved in block production over time. And there are very different approaches to how Solana is thinking about that today versus how most, I would say, Ethereum's are thinking today. But I would say that is very directionally the trend that we are headed towards in both ecosystems, that both seem to be pursuing as kind of the answer. And so it's been very interesting to start to see both strategies. And this is probably the first time that you'll really start to see it play out more, because obviously, I mean, Solana doesn't have MCP or anything live. So getting to see kind of live on Ethereum is finally a testing ground of, starting to see this, private building and more collaborative building over, the next year or so as BuilderNet rolls out. And we just get to see very, very soon, even the live usage of the early stage stuff is going to be great. And then similarly, it's the same thing I would say with Rollup-Boost on the L2s is a little bit back in that direction of what we talked about earlier on is I would say there was some level of disappointment in some regard for L2s to Ethereum of, not as much innovation as maybe you would have liked on certain different dimensions of, go try some stuff out and, we can learn a lot of lessons. Maybe some of that comes back to Ethereum. I think Rollup-Boost is one of those things that, as L2s are finally getting more mature, they have more users. Now they really need to think about MEV and get serious about it. And same thing, this is one of those areas where it's going to be a good testing ground, and you'll probably see these two areas kind of start to converge again over time. But yeah, excited to see both of them.
I think basically everybody agrees you need to get as many parties involved in block production as possible for competition reasons and censorship resistance. And to kind of put a T on it, I think what we think is that to actually get these things, you want to be meaningfully geographically distributed too. So it sort of doesn't matter if you have many people involved in block production, but they're all in one data center in one jurisdiction. You want many people across the world with different compliance policies, different preferences, all kind of collaboratively building a block instead of doing that in one place. And that gives you the constraint of trying to build a really performant chain while also having things be meaningfully geographically decentralized, to come back to kind of the Ethereum roadmap and how much we should be focusing on L1. I think you want to improve the L1 to the greatest extent that you can without sacrificing geographic distribution. People from all around the world kind of running proposers, because that's where you get real censorship resistance from in the long term. And I think BuilderNet is a really interesting bet in this direction of, can we harness the energy of MEV, people all around the world running the software to get many people in many different places involved in the process of building a block? And then can we use that to let rollups outsource their decentralization and other features to these people that are already running this TE software to kind of try to put a bow on all of this stuff?
Yeah, I think for me, the takeaway is, I think people have been looking at MEV at this like really ugly duckling, of like, okay, you kind of, it's so ugly, you don't really want to look at it, but you kind of have to if you want to keep your chain decentralized. But I think it's becoming like increasingly clear what we've been saying for a very long time. This is like a really, really, really instrumental part of your blockchain design. Like you should be thinking really like MEV first, and like the way that block building works and like mempool design works, and these just influence such a huge amount of the final user experience, the developer experience, the security of your blockchain, that it's very, like, it's just very, very hard to kind of quote unquote like outsource that or like ignore it, right? In the kind of the way that you think about your protocol, right? So I think you have a huge, the positive take is you have a really huge lever to differentiate and to control the user experience and to improve it through the way that like you design your sequencer and the way that you design your mempool and the choices you make in block building. And when you have a kind of interface like that established, there's so many things that we didn't even get to touch on today, right? Like from TE co-processing to like multi-prover systems and in bridges and like, you know, AI agents and like really, really like cool stuff that, you know, it's some way or another are like all connected to block building, right? And like the idea that like time matters a lot in the block building process, and like it matters for financial applications most of all, right? So if you're Ethereum, like you want to help DeFi, or like if you just, you know, want to help DeFi apps succeed, then I think one of the big things you can actually do is allow them to do this kind of just-in-time computation that happens as part of the block building process. Like I think we're still like a little bit away from that becoming a reality, but I've been such a big like bull or like believer on this idea for many years now that like so much computation should actually happen off-chain just in time as part of the block building process. And I think I'm optimistic 2025 will be the year that I think we will finally start to see some of those things out in the wild. Okay, and with that, thank you very much, Jon, as always. And yeah, Robert, thanks for coming. Thanks for the really fun conversation.
Thanks for having me. It was great. Talk to you all next time.
Ton of fun. Thanks, guys.
Thanks for joining us today. As always, nothing we say here is investment or legal advice. The views expressed by the course are their personal views alone. Please see our podcast description for more disclosures. If you enjoyed this episode, please feel free to subscribe and share it on Twitter. Thanks and goodbye.